Hello all, welcome back to the world of risk. So here we are starting with basically operational risk, and we will dive into basically money laundering and any anti-money laundering risk in the couple of lectures, in the upcoming couple of lectures. So stay tuned. So let's start. So operational risk, or and we'll on a focus to anti-money laundering. So this will be the contents. Go ahead, like pause the video and check the contents. This is what we are going to follow throughout the lecture. It may be a month-long series. So stay tuned. I will be covering everything related to AML and KYC, everything. So introduction to this operational risk. So we have already talked in the first lecture about the operational risk. However, I'll go ahead and just quickly brush up. Operational risk is the risk that associates from of a failed process, people, system, or external events, or say natural disaster, then fraud within human errors. So this kind of risk which hampers the operation is known as a operational risk. So operational risk are basically, this operational risk can be divided into internal fraud risk, types of operational risk basically, internal fraud risk, external risk, cyber risk, natural disaster, AML risk. So these kind of risk are present like model risk. So our aim for this series would be AML. So let's go ahead and see what is money laundering. So what money laundering is? So money laundering basically is like introduction of the dirty money into the financial system and cleaning the dirty money into a white money. That is money laundering. Simple. You have bad money, put it into the financial systems, withdraw it, make it clean money. That's it. So why is money laundering, combating money laundering important? So, as per a report published by UNODC, or United Nations Office on Drugs and Crime, the average loss that happens due to money laundering activities across the world ranges from $800 billion to $3 trillion. So this is a whooping amount. You can understand how it impacts. So we have gone ahead and segregated into three parts: prevention of criminal activities, ensuring economic stability, and promoting fair business practices. As you know, if you do not have money, you cannot go ahead with criminal activities. You need money to sustain the activities. So if you stop money laundering, you put a prevention on criminal activities. Economic stability, as you know, dirty money when introduced in the system leads to inflation or those kind of effects. And when there is enough money in the system, it generally leads to loss in value. So to prevent economic downturn or fall, we need to stop money laundering. The third is promoting fair business practices. An organization which has access to illegal money or lots of illegal money can go ahead and empower or deploy resources which another organization with limited capacity of money or resources do not have. So we need to stop money laundering so that fair business practice is promoted. Let's see AML and stages of money laundering. So what is anti-money laundering? In a simple language, stopping money laundering using set of laws, regulations, and procedures is known as an anti-money laundering. Here, you identify activities for money laundering and you stop it. That's it. So, money laundering is defined into three stages: placement, layering, and integration. Let's quickly check those. Stage one, the placement stage. So this is the introductory stage of money laundering. So here, what does placement stage mean is, in a simple terms, dirty money or the bad money or the corrupt money generated from illegal activities is placed into the financial system. Bad money, put it into financial system, placement. That is known as placement. So ultimate aim is to disguise the origin of the illegal money. So placement is done through various methods. So some of the methods used can be cash deposit in bank, wire transfers. Say you have given it to any other party to deposit in on your behalf. So these kind of activities are used in placement. So remember this, shell companies are used. So these kind of things where the source is not identified. Now the next stage is the layering stage. Once you introduce the money into the system, what is layering? Layering is where you make many layers. so that you do not know where the origin is. So layering in simple sense is you are moving the dirty money in the financial system from one place to another so that the origin of the fund or wherever you have deposited originally is not known, or it goes down in the layer. So this is simply layering. So methods used in layering are offshore bank accounts are used, moving from one place to another, or say somebody transferring to 50 people, then 50 people transferring to some other place, that place is transferring back to me, so the origin is hidden. So the aim of this stage is to create confusion and make it difficult to trace the funds to back to the original source. Now the integration stage. The integration stage is the last stage of money laundering process. Here, that bad money what you have introduced in the financial system and you have been moving it around from here to there is finally with the origin source, or maybe with the origin, and they withdraw it from the financial system, showing that this money has come from the financial system and it is legal. If you withdraw money from the bank and say go ahead and use it in somewhere, or you say do a online transaction, and if somebody questions you where did you get the money, you can show that I have withdrawn from my account or from the bank. So yeah, this illegal money is converted into white money and then withdrawn. So this is the integration stage. So this is achieved by like you have say these are some of the techniques where you purchase high value assets, like you purchase real estate, luxury cars. So you have paid huge amount of credit card bills. So these kind of things are done. So this is the integration stage where bad money is converted into the white money. Now let's see the examples. You can pause this video and check the example. This is a sample example. There are multiple examples, but this is what quickly demonstrates a money laundering process. So I have already explained, so you can go ahead and check this. Now let's come to the interview questions, which are related to operational risk and money laundering. So, what are the current trends or emerging challenges in operational risk management, and how would you address them? Key performance indicators or KPIs or metrics that you use to monitor operational risk. Can you define operational risk and provide examples? What is money laundering and why is it a concern for financial institutions? Can you describe the stages of money laundering? And why is integration stage considered the most crucial part of money laundering process? So these are some of the examples that has been recently asked in AML interviews. There are many questions for AML, but this is special focus to operational risk and AML. During this course, we'll be seeing the regulations, the acts that are placed in the AML, jurisdictions, what are the country-specific AML. So this is going to be a very big like series. So stay tuned and we'll cover questions based on each topic in each of the lectures. So for today, this was it, guys. And please like, share, and subscribe. We have crossed 670 subscriber. That is awesome. And request your support for this. Do view the full video and please comment down like if you have any doubts on these videos and what topic you want to see next. So thank you so much for your time and have a great day ahead. Bye bye.